This is Justin AMZN for Friday, June 14th, 2019. We had a really small candle today, or Friday, The range on this was 17. We are definitely forming a triangle above the 5, above the 21. Last time we did that, we were right here. We were at a range of 1623 back on March 29th. It formed a little larger triangle and not quite as clean as the one we've got now. And I'll show you on the 5 how clean it is. And then for this one, we were running right up into this downtrend line that had been playing out prior. Nope, not that one. These ones. And then I took that same range and this same range and duplicated it here. And we're running into that. We don't really have a downtrend line we're running into right now. If I draw, let's just see, if I were to try to connect this, it doesn't really hit these highs very well, so it's not, we're not quite at the point that we're running into something like we did before. That's my point. If we look back onto the 5 minute, this triangle is really strong, really nicely consolidating. I'm just putting the upper range of the symmetric triangle near the endpoints. This one cuts a little bit more into this one, but right at the endpoint, and this is one I was having trouble drawing. It's like, do I draw it like this? Like how does this work? And it wasn't fitting very well. Well, after a couple candles here, it's just much more obvious where the triangle is. So that that helps, just kind of setting up trades for this day or this day. That it's you're kind of range bound by the line, the horizontal lines, but even more so by the triangle. And so this was Monday, Tuesday, Wednesday, Thursday, and Friday. Friday just being a really small day. Inside the right now, it did make a lower low, a lower high, but it was inside the triangle's range. So you got to take the whole triangle in consideration. But the day actually started out as like a bearish gap and go, and really held up well. We'll see if that plays into a continuation, which would be a move going up bullish, and see if we can get up to the target here at 1925. The date I've got on that, looking down at the bottom of the chart here is the 18th. So the 17th is Monday, the 18th is Tuesday, to see if we can get a massive move out of that. Otherwise, we're just going to kind of have to wait and see. I mean, we'll have to wait and see anyway, but I'm looking for a continuation. If we can get out of this range and move with a gap up, I see that being a bullish retest gap. Should retest a little bit and then continue higher. Maybe give me an opportunity for bears to load up right at this line right here at 1880.05 and see if they can push it down a little bit and then come back into this downtrend line and start to rally off of that. If we can get pushed down even down to 1863, as I'm saying that, I'm like, that's not the right number. 1863.84. If we can open up here, be pushed down here, and then rally off of that, that'd be even stronger, because it's the kind of thing that's like, we really shouldn't be back down here again if we're going to go bullish. But it would be a really nice sort of S-curve off of that and trap a whole lot of bears to do it. So that kind of continuation is what I'm really looking for. The only other thing we could wait for, if we do have yet another really small day and have 5 days forming a triangle, would be to let the 5 catch up a little bit. And if we just were to tag that a little bit, let's see. So for the 5 exponential, it's got 1, 2, 3, 4, 5. These candles, I think it actually has this close being calculated as part of it too, because otherwise it would be much higher based on closing. So I think it's factoring 1, 2, 3, 4, 5 and not considering current day. So when this one drops off, then it should shoot back up here That doesn't make sense for this one. I'm just trying to figure out where the 5 is coming from. It says close, so moving average exponential says close and 5. I see the 5 pushing up here into the 16. I said it again, into 1863.84. So see if that plays out. There's the triangle. I'm going to leave that on there. I'm not sure how the lines are going to move around. Actually, you know what I'll do? Let me see if I can take it out of Monday's range and leave it in Friday's range. And we'll see if that stays like this as things open up Monday morning. And then we'll just kind of see what happens. On Friday itself, looking at pricing at prices near 1863.84 would be the calls for the 1865 and the puts for 1865. And the puts just lost value all day long. There was a couple opportunities to buy. They got a little bit of a gain, but not much. And then the calls, they actually stayed in the money, I think most of the day. Nope, take that back. They were not in the money in the morning, and then they stayed in the money into the afternoon. It just kind of had this grind higher sort of push. And here, we'll zoom in on the day here. It was really doing a great job making this wedge. So higher highs and higher lows. Come on, there we go. And then this one, and it was compressing a little bit as it went up. And then you threw up this inverted hammer right into this downtrend line, which we were trying to draw. So if I zoom back out on this, okay, so let's say we drew this triangle. Oh, I gotta back up a little more, sorry. Let's say we drew this triangle. All right, here we are. End of the day, Thursday. We've got this triangle drawn like this, and it's like, okay, let's see what happens. And we step into the day, and we've got some prices down here and then up here, and we get into the open, and it's like, oh, look, we're bouncing here. And you start to draw these lines. Now, you wouldn't have this drawn quite yet. So I'm going to zoom in back on the day, so you know where the triangle. Oh, not what I meant to do. Sorry. You know where this triangle line comes from and this triangle line comes from. Those were doable without Friday's candle. Okay. So let's get into this now. You've got these lower wicks here. You got these upper wicks here. You have this massive one. But if you just start to connect these, and that's what I'm trying to do here. So if you just connect enough of these together, there's a nice move like that, and connect a bunch of these. Then we continue this way, and it's like, oh, that's just holding. It's continuing. This is great. Okay, we touched it once more up here. Let's do this. I'm just trying to show, like, you could actually have had this drawn in really nicely. Oh, it's not moving right. There we go. Okay. You could have been drawing that in, like just like that. Extend to the right. It's right up in here. This one, if you want to get a little more precise, let's do this. Like, okay, I got some nice levels in here. After these, I mean, even after these two, let's see what you do after just connecting two, well, those. Send to the right. You're just about going to buy there. You're going to sell here. It's like, this is the framework. You can do it after just two lines. I mean, if I just connect these two, and then if I just connect that and that, like, I got my framework for the day. We get up here, and it's like, man, this is really compressing. Wedges, when it does this is a wedge. And as it goes up and compresses like this, it generally, I don't know what the percentage is, but I think more often than not, it actually collapses and goes bearish out of this. So you've got this putting some pressure. You got this putting some pressure. You have an inverted hammer. Now it's a bullish candle, but it's an inverted hammer, a good place for resistance, and at the same area of resistance we ran into on Thursday and sold off from. Almost identical candle right here. Inverted hammer. Not quite long enough of a wick as this one. And let's say the open and the close were 64 cents apart, and the candle itself was 199. So that's really close to a 2-to-1. This is like a perfect inverted hammer. The open and the low were the same. So it's a shaved bottom. This is just an incredible candle to have right here. Shaved bottom, inverted hammer, right at a resistance of the wedge and of the triangle. What's going to happen? It should go down. Okay, it's going down. Went down here, triggered in bearish, consolidates into a triangle. It's going to try to have one more bounce off of this, but this is compressed so much, it's like it's ready to go down. It gets that one last bounce, and then here we go, we're breaking down. So you're already in from here, or any retest back into the body of this range. Lower highs, a bunch of, well, let's see. This, okay, that's a higher high than that one. Generally lower highs. Starting to roll back down. Another inside candle, building some pressure, breaks down, this time with a lower wick. And this lower wick then turns into this next candle here. You've got some buying coming in. Let's see, the high and the close are the same. The low and the open are really close. This is almost a Marozu, and then a bearish engulfing of that. Right back into support here. Get the bearish momentum moving, and this looks like, okay, it should just continue down, but it's got a bit of a retest. What's going on? Oh, it's going to come up a little bit more. Take out the high. It shouldn't be up here. That's kind of it. After this candle, it shouldn't be up here. This is giving you a great opportunity to get in and get bearish. I don't know if it plays out. Let's see. And no, it just drops sideways. But this was your play here, going bearish on this move based off of that candle at the location. We're out of the wedge. We're still under the triangle, or under the symmetric triangle. There we go. Just grind mostly sideways into the close. Seems like after this kind of big candle that was without high volume, that was kind of opportunity just to get out or to tighten up your stop and then be stopped out or trailed out anywhere in here as it moved back up. Probably after having 4 bullish candles, get out of that bearish one, or maybe you didn't wait that long. Maybe you were in saw these 3 bullish candles, and it's like, okay, it's got to go down. And as soon as this one started to move up, it's like, okay, stops right here, get trailed out, get a little bit of gain, something like that. So take these off and don't have much direction into the close to see what's going to happen next. On the calls, we were moving up nicely. All these all these higher lows here. On the calls, they put in a pretty steady low around $5, even with a really nice hammer here. You could have been setting up a trade to get in, like on these pullbacks to 5 and getting out anywhere up here, like 9 worked. Buying at 5, stop at 4, and getting out at 8, 9, something like that. 9 worked here. So it worked this time. It worked, let's see, wouldn't have been filled there. Worked this time, and then probably would not have been doing it right into the close. But 1, 2, 3 times going from 5 to 9, that would have been 4 each time. That's 12R. If you did the same trade, buying the low, and it's like this was probably the best one to buy at because it had already shown itself to work here. You pulled right back into our 1863.84 price, and so this was buying 935. So 935, probably if you had it set up 5x4, you were getting a little nervous as this pulled back down, or you saw that candle, you had it set up, you hit send, and then as this candle opened, it should have been filled here, and that moved up to 9. So this would have been a nice one to go to get in 5 by 4 and probably taken off profit at 7 or 8. Maybe you did 9. I don't know, but there's no reason that it should work out again. We just had this sort of setup to say, okay, we're going to go from 5 to 9. We're going to go from 5 to 9. We're going to go from 5 to 9, and then it stopped working. It stayed a little bit higher. It didn't pull down quite as far. It started to compress, and you can quite get as high as 9. Right? That inverted hammer was 1155. So that was right here. Yep. So if we look at the puts at 1155, that was right here. The puts didn't do anything. These 1865 puts didn't do anything. Let's see about 70 puts. Did those do anything? 1155, because that's a great candle right there. Okay, could be getting in at 2 anywhere through here, and then getting out at 3. That's all it really did. As it moved from 2 to 3, kind of spiking there. It's a little disappointing in the puts. So the calls had a lot more movement, but the puts not so much. Okay, this would have been buying probably 4 by 3, and that moved up to 6. So that could have been a little bit of a gain there. 4 by 3, and it's not moving in your direction for a little while. That's a little nerve-wracking. You're slowly moving your stop up, or waiting till 30 minutes go by and then moving your stop, and possibly could have been trailed out early in that one just to see it go in your favor. It just depends on your setup and how you're trading it. But yeah, even like this, the 1870, 1875 puts didn't really do too much. It would have had to be in probably 1880 puts, which are the ones to look at because that's our next line. And so these, yeah, this put in a low. So 7 by 6 would have been a good setup. 7 by 6, that moved up to 10 or even 11. No, not quite 11, 10. So that's only 3R. Much lower value on these. You're a little bit further in the money. 1880, it's not in here. 1880 is the next line, but that means getting into puts on its way towards the strike you're talking about. So that was getting into puts as it's moving up here and getting in right here, and that was really good. And this was an inverted hammer, and then it worked. I think it's just the location. I think knowing that when you're zoomed out, seeing, hey, we're right into that. It's like you're getting ready. It's like, okay, if we roll over from this downtrend, this is the right time to do it. Look at this wedge. That's the right time to get into whatever the puts are. So those are your signals, but you're getting in. And you got to pick the option, get in that is going to set up right and going to move with you as it rolls over. And if it moves against you and continues to break out here, that was the other possibility that it was going to break out here. That you've got some liquidity to get out of it, and so these are already lower volume a little bit, just because they're. Whenever I see more of these single price within a 5-minute candle, I mean, it just seems like there's not much volume there. So like if we go back to 1875, I have very few of those. I've got a couple still, but it feels like I've got fewer of those lines. And always going out another week and going out of the money would help as well. So yeah, a couple opportunities to take this bullish or bearish. Get rid of the wedge lines, but we keep the bigger triangle here. So yeah, we'll see how things play out this coming week. See if we can get up here. If we are headed that direction, I'd be looking at probably some calls out of the money for next week or this week. So like 1925 is where I've got the target set up. We've really held that low really well. So Friday we held the low around $5 really well. I'd be looking to get in like 5 by 4 if we can open a little bit up and look for that pullback. So we only all day we move from like 5 to 6. So if we open up here and pull back, we should pull back into the $5 price. As we pull back down, just look for a hammer type candle off of 1863.84. You get it above that, and it could be something like 5 by 4 with the 1925 calls. So we'll see if that plays out. So that's the setup. If we gap up here, 1880, roll back down, and then bounce as an S curve. We didn't do that here. We barely retested at all on this candle. Ran right up into the next resistance. If we did something like we gap up a little bit, it's possible to just get in right then because it should still be above the triangle. And so a quick retest. So if we let's say we open, let me see if I can draw this. And I mean, I don't know what's going to happen, but if we could open up here and then pull back like that, that could work. Or if we, so pre-market, if we're up here and then come down some and, do something like that. We've done some of these bigger candles. So, I just know we could do a double top thing like that, or it's going to go in this way. And then we're here and it's like, oh, it could just roll over. Even if it does though, like I said, you can get in down here going bullish because we should hold this. If we don't hold this, your stop should be right below or, a few dollars below, like down here, or even below the low of yesterday or on Friday. Be more conservative. So we'll see how this plays out, and back tomorrow with another review. So I hope this was helpful, and we'll see how things play out. This is just AMZN. Thanks.